No follow through on the crypto rally, despite Trump betting odds running away. Bond market yields are testing local highs. That could provide a headwind. And finally, some hedging demand comes in and longer dated calls get sold to fund downside protection. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. Got my man Dave Brickell from FRNT. And today we've got Paul Howard here from Wincent, Senior Director over there. How you doing, sir?
Hey, very good to see you guys. Great to be here. Thank you.
Yeah, good to have you on.
Good to have you on. So we ran a competition a couple of weeks ago, a Deribit giveaway. So we decided we'll do it again. We had a good response there. Lots of good comments from you guys about how much you love this podcast. So same again, hashtag Deribit giveaway. Stick your comments, your likes, your subscribe to the channel, and we'll be sending some quality Deribit merch over to you or to a lucky winner. Cheers. All right, that's me done with the Deribit plugs. So what are we thinking this week, sir?
Yeah, well, we had a nice run again, didn't we, last week? Just kind of fizzled out a bit in that push to 70k. I think like there's obviously a lot of wood to chop up there, so to be expected.
I was really hoping for that 70k test, though.
I know. I thought we'd see it over the weekend. A bit of an illiquid weekend, and we'd maybe sort of push it, but it's fine. I do think this bond move is maybe having some short-term impact.
Stocks don't care, though, do they?
Stocks don't really care, and it feels a little bit like this US exceptionalism trade coming back, like dollars bid.
Well, people are calling that the clear Trump trade.
The Trump trade, but then Bitcoin's meant to be the Trump trade as well.
I think Trump trade keeps changing.
Yeah, but I think I keep getting a lot of questions around the bond move. Some talking about, is it Fed mistake? Is the market price and a Fed mistake? I don't think they are. Is it? I mean, we did see the US debt increase up by 500 billion over the last 3 weeks. It's like just crazy numbers. Like that debt is just spiraling out of control. However, I don't think market's concerned about US debt, because otherwise the dollar would probably be getting hit as well.
But and that's hanging up near the highs, right?
Yeah,
local highs. Yeah.
And we spoke about that, right? Because the US is still kind of outperforming the rest of the world. I don't think it matters in terms of when you're having this stronger dollar amidst everyone cutting rates. It's just that the US still seem better placed, and certainly China, that kitchen sinking it. ECB cut rates last week again, and look like they've got further to go. So I just feel like we're just seeing a bit of a correction. Like dollar and yields sold off quite heavily into I guess September, and now they've bounced a few good data points out of the US, and the market's just playing this reflation trade. So yields have popped up a bit. Dollar's obviously stronger, but I think everything looks good. My worry is how your dollar yen's on bid again, pushing levels that the Bank of Japan get uncomfortable with. Then CNH kind of needs to follow yen, and then if there's some what we call smoothing, but currency intervention by any other name, to just try and keep a lid and slow those moves higher, that's actually a little bit of like a liquidity drain, because you're selling your FX reserves to support your own currency. That tends to be a little bit negative for Bitcoin. So I think it may be a headwind up here, rather than being any kind of change to what is still a really supportive picture, both from the macro, from the liquidity point of view.
So obviously, we're generally quite bullish, but it'd be good to get another perspective. So I'm hoping finally someone else, Paul, can you join me and be not quite as wildly bullish as everyone on this show is? But before we get into your view on Bitcoin, why don't you give us a little color on how'd you get into crypto, what you guys are doing in the space?
Absolutely, yeah. Thank you. Look, I just mentioned something on the macro side. I think we're coming into earnings season, right? So we've had a good few numbers come out. Morgan Stanley had a good one the other day. Goldman, I think, had a decent number as well. And it's really kind of a risk-off environment as we're coming into the earnings weeks in the US, and I think that's reflected in the equity markets overnight and on Monday. We're probably going to see a bit of a risk-off kind of trade coming in. So not touching 70 over the last few days over the weekend doesn't surprise me too much. You know, we're then coming into election, and again, you know, I can expect some volatility, but you know, I don't think we'll break 70 before the election. That's my personal view on all of that. So, but look, where am I coming from with it? Well, I've been in crypto since 2012.
What did you do before that?
I was a bit of a tech geek. So I graduated in computer science, and then I spent about 15 years at Morgan Stanley and Goldman working on the algorithmic trading desk. So listed futures, options, equity trades, and the algorithms that were doing those trades. So the opportunity to join Wincent came along, and you know, it's a high frequency market making fund. We are regulated in Gibraltar, and we trade somewhere between $3 to $5 billion a day. So I'd describe us as one of the kind of biggest names in crypto that you may never have heard of, and that's only by design, really.
Right.
So we've got a 7-year track record, and you know, we're very focused on what we say is our principal fund, which is our market neutral, market making fund.
And you market make perps, spot?
Perps, spot, yeah, predominantly.
No options yet?
No options yet, but you know, we're really looking forward to seeing what happens in that space. I think it's primed for growth over the next 2-3 years. And we're very much, you know, keen to be involved with all of that expansion.
So the plan is to get involved and market make the options, yeah?
Yeah, that'll be, I think, part of our strategy as we move into next year. We want to do that in a, you know, regulated and licensed framework. So we're just kind of going over our strategy internally on all of that good stuff. And, you know, for us, you know, deploying products around that for our investors and our clients will be, you know, really interesting period of growth for the company.
Yeah, so like one of the big trades that I guess you've seen a lot of flow in or are very aware of is the basis trade, right? So this is something we've talked about a few times on the show, and we're calling it one of the biggest reasons why those inflows came into the ETFs, right? As people kind of bought the ETFs as a way of doing that cash and carry arbitrage, right? So can we talk a little bit about, you know, that trade, how you see that trade, whether you think that's a good trade that people should be doing? Does it make sense? Like, what are the nuances around that trade that maybe not everyone's aware of?
So yeah, you know, the basis trade, one of the oldest trades out there with futures and spot. You're effectively sort of, you know, managing that, and you're gaining the exposure and the funding from that trade. The way that has become institutionalized over the last 10 years in crypto, originally you and I could have done it in our bedroom with a couple of laptops, you know, buy the futures here and sell the spot there. We would now...
I mean, the other way around.
Forgive me. We can do the inverse of that trade as well, but we would basically be doing that manually. Is my point. And so what we would end up with is a situation where we could arbitrage that across different exchanges based on the funding rates that you have in different exchanges. And I think what we see nowadays is that trade tends to be done electronically. So it's using high frequency technology across multiple exchanges, and you know, it's become a bit more of a complicated trade to put on manually. What you'll find are investment companies, market makers doing those types of trade themselves, and you know, the way to access that as an investor is to be invested in one of those funds.
And does it mean, now that more people are doing the basis trade, does it mean that it should blow out less? Basically, does it get arbed out really quickly now, and it just doesn't really manifest for very long?
Yeah, spot on. I mean, you could keep that trade on for several days or weeks, maybe even 4 or 5 years ago. Whereas now what you're seeing, in fact, really since the collapse of FTX, is that trade will kind of disappear within day or an hour or less.
Oh wow, that quick?
Yeah, so it can stick around depending on the exchange, but the funding rates are changing so rapidly these days. You know, every 8 hours or so, you've got you know, machines that are able to take out that arb pretty quickly. So yeah, my view on that trade, the best way to probably be doing that is with a firm like ourselves or some of the other folks out there.
Oh, is that something that you offer clients that you can do it for them?
We are effectively open to the public as a fund, as an investment fund, for qualified investors.
Right.
So you know, unlike some of the other folks in the space who are market making, you know, those are prop trading funds. We are different in that we would allow qualified investors to come into the fund as you're.
And then part of your trading activity is market making.
And part of that is market making.
But it's also just principal risk taking as well.
And principal risk taking.
Right.
We do have ability to put risk onto our books and to manage that across the market.
But market neutrality is your kind of goal, right?
Absolutely, yeah.
Okay.
And we've seen that reflected in, our Sharpe ratio. We've seen it reflected in our returns the last 7 years. We've
So the vol of your returns is just tiny, basically.
Yeah, I mean,
right.
we're talking about like a 2.6 Sharpe, for example, which is pretty decent.
What sort of vol is your fund on? Like, because obviously crypto vol's like 50, 60.
60, 70, isn't it? Yeah, generally, yeah.
So what's the vol of your fund? Roughly?
I would need to check on our prospectus to be frank with you. Yeah,
Okay.
yeah, what the latest is on that.
Right.
But, I think to see any sort of Sharpe ratio in a traditional finance world below sort of, below, let's say 2, I think... forgive me, sorry, above 2 is going to be...
Yeah, 2's amazing.
Right.
Yeah.
I mean, we've had this conversation before. Like, again, it speaks like the opportunities in crypto at the moment. And yeah, everyone, like, people we speak to from the traditional world that just think, crypto, this, silly returns, huge drawdowns and stuff like that. Well, obviously there is all that goes on if you want to be exposed to the beta of it. But like the market neutral opportunities where there's like steady returns with ridiculous Sharpe ratios, and minimal drawdowns and all that stuff. It's like why would you not be exposed to this space and invested in it? I mean, clearly there's issues around some counterparty risk and which we've seen, but there's even now more effective ways of dealing with that as well. And I guess like you have funds that are experienced in the space who've stood the test of time that can give you that exposure. And
that market neutrality. So does that ever involve spreading Bitcoin against Ethereum and stuff? Would you consider that market neutral, or do you actually have to be delta neutral in Bitcoin and Ethereum and everything?
From my own personal take on this, it would be a delta neutral strategy. Like if you're trying to hedge against other assets in the same asset class, that's not necessarily...
That's not delta neutral.
Yeah.
So it's not like beta neutral, it's actually delta neutral to each individual thing that I'm trading,
to each asset that you've got on the balance sheet.
Okay.
Yeah.
So then let's talk a bit about sort of views of the market, right? So obviously it's everyone's gearing up for the election move now, right? So we've had Bitcoin's correlation to Trump odds has been pretty high, I guess, in general. But in the last week, it seems to have run out of steam a bit. Trump odds are running away to the upside. He's obviously rocking up in McDonald's to show that he's in with the common man.
Yeah.
And people seem to be liking what he's doing, right, in general. But crypto failing the last little extension up to 70 and beyond. So, you just said you don't think we break 70 before the election. I'm more interested in what you think we get after the election. Like, what do you reckon?
Yeah, I mean, if you look at the market, I think they're pricing in a 10% or, sort of plus or minus 5 move on that. So, that's where I see us breaking 70, probably with a Trump victory. But I think at the end of the day, regardless of who it is, we're getting more institutionalized in this space. And even Kamala's been making some positive noises, compared to what she would have been doing 2 or 3 years ago, or Biden was doing 2 or 3 years ago. So, I think afterwards we get a decent pop. It's going to be, I think, a bit of a rally to USD over the coming sort of weeks as people look for a safe haven. You've still got a lot of global macro issues. What's going on in the Middle East will obviously unsettle the markets. And I think that will mean a rush to US dollar quality, a flight to quality.
So you think we get a pop on the election, but then the dollar bid that comes fades it back down again, does it?
I reckon we do, that's it.
So we do our usual crypto, buy the rumour.
Buy the rumour and sell the news.
Sell the news.
Yeah. And that's
it has been a pretty consistent pattern for any crypto catalyst in the last God knows how many years.
Doesn't it?
But I don't feel like we've had the blow off run for this one.
Yeah, that's
right?
that's kind of my view on it. I think as well, if you look at past election cycles, we've actually had a pretty good run into and through the election, which normally starts actually towards the end of October. So I think there's that. I agree with your view. Like, obviously Trump is the clear, or at least we think the sort of most positive outcome in terms of crypto. But Kamala's making decent noises. So I feel there's an asymmetry into the election in that Kamala wins and it's status quo but actually probably better than what we've seen over the last few years. Trump wins, obviously, on the face of it, is going to be more open to it. But I mean, we'll also see how much he's just talking stuff up just to just for votes.
What's he actually going to do? He's going to say a load of stuff, just like when Nashville, for example, he's going to say a load of things, and there's the market's like, okay, now what?
Yeah. Which then I think we can quickly go back to the macro, which I think is more important. My newsletter this weekend, I connecting the dots, London Crypto Club. I called it liquidity trumps all, because I'm like that, whatever goes on there.
Very nice.
Yeah, you see what I did?
Very nice.
But I think we've got this short-term noise, and obviously it's going to increase over the next couple of weeks. But ultimately, I still step back and go, you've got Fed cutting rates, China's firing bazookas to really sort of flood the market with liquidity. ECB cut rates, all major central banks are cutting, liquidity cycle's picking up, global M2's picking up, and I think all these things will just start to sort of filter through. And I do think the market's underpositioned. And I mean, we've discussed about equities.
2 billion of inflows this week, though.
Yeah,
in the ETFs, chunky.
Yeah, and I think the market's now, because we're starting to move up, and the market's having to reweight higher. And chase some of those flows. Obviously, on the ETFs, as we discussed, you don't know how much is just actual real inflows, that hodler type inflows versus those that just play on the basis. But yeah, I think market's underpositioned in crypto. I think market in equities is underpositioned, and you start seeing these move higher, and then you like particularly if you're benchmarked against, say, Bitcoin or S&P, you've just got to reweight higher and chase it, and you're almost having to stop into the election. Or you sit there tight and go, well, let's just hope the election result, we get a dip to sort of buy into.
I mean, I have to say, though, this week, the options flows were a little surprising. So we had, obviously, the big pop. You would have thought this close to the election, we'd be seeing quite a lot of bullish flows still, right? And actually, not so much. We saw profit taking in relatively short-term call spreads, like November expiry stuff that people had bought for the pop, and they're just getting rid now. But actually, probably the most interesting flow for me was risk reversals, hedges being put on, selling longer dated calls. So selling March calls continue to get sold, March 25, June 25 calls are getting sold as well in like the 120K strike, something like that. And that's being used to fund protection. And I haven't really seen any real medium-term protection buying in ages, right? So I think it's really interesting just before the election, seeing some of those flows coming. Now, it might be that those flows are coming along with delta buying. People are saying, okay, we're ready for this move. We want to allocate now. We've waited, and we're buying, but we're buying with protection. Maybe there's some of that going on. But I would have thought a little bit more of an options market bid for the upside. And whilst there is a slight bid for the upside, probably somewhere in the magnitude of sort of 1 to 3 vol points for call premium, given that everyone thinks it's a positive catalyst, the election, you would have thought the calls would be way more bid than they are. So something fishy's going on, if you ask me.
Yeah, and I think the other nice bit of news was the approval of the ETF options that we saw as well. I think that's going to lead.
Do you know when they're going to start trading, though?
Great question. I don't know the answer to that either. Yeah. But again,
if I was an options market maker, I would probably know that. But yeah, I need to find that out.
Again, these are all positive developments. Yeah. It is. I mean, I've seen lots of people asking around, why crypto vols are still like relatively sort of tame, relatively muted. But
Realize has been low, right? Realize has been in the 40s. Yeah. So what they're going to do? Pay 80 for it? Like that's the thing.
And we tend to get these moves as well, right? We get like quite a sharp move, and then we just kind of drift in a range again. So and there's still that knee jerk, I think, from you vol boys just coming in.
I think calendars of the trade. I put this on Twitter yesterday or the day before, because obviously you've got this massive vol premium, as you said, right? They're pricing in like a 10% move for the election. You got this 20 vol point premium in the forward vol, right? If you look at the 1 week forward vol, and yeah, even if we get a pop, I mean, we're not going to 100K in one shot, right? So it's like, if we get a pop to around 80K on the election, that's already a bit of a stretch from here, right? It's like a 20% move, right? If it's pricing in a 10% move, you're probably fairly safe to say we're not going to breach 80K by the 8th of November. That's what I'm saying, okay? So if you agree with that, you can sell the 80K calls in November, in 8th of November, and you can own similar strike or maybe slightly higher up calls in end of November. And then you can be like, well, the knee jerk of the election will start the rally. And then as the rally gets going and the inflows come and everyone loves it, assuming it's not a massive sell the news within a few days, right? If we do get a bit of a move, like we've been talking, we may do, then that back call that you have to end of knob, that's the one that really kills it and makes a load of money. But you funded it with the 8th of November and you've shaved off like 2/3 of the price or something like that.
Yeah.
Right?
Well, what I do think is interesting, I mean, you're saying about how actually it feels like the options market's been quite sensible and put on some hedges and funded it with, you know, selling some calls. I mean, even and Paul, you might be better to speak to like on the funding rates and stuff. But like, there's been no signs. We've had quite a big move, right? Like, you know, up to that, you know, just tagging 69k or what have you. But there's still no signs of like froth, and this is what I think which keeps me really bullish. Like, and so we've not had a blow off top or anything. It's just felt very calm, very orderly, sort of grind higher. Yeah, there's been no like FOMO and silly moves. Funding looks like okay.
Yeah, and we're now in a declining rates environment, right? As well.
Yeah.
I think what we're going to see with the ETF flows as well is that we'll get this more of a stable baseline. We'll take more volatility out, and to see it coming down to sort of 50, 40 vol perhaps at some point, because you're going to see people putting money into ETFs. When retail puts money into ETFs, they're not going to be taking it out every month or throwing it around. These are people who are going to be putting it in as part of their retirement portfolio. And yeah, albeit now it's kind of owned by the likes of Millennium and the other folks out there. You know, the stable money, I think, is going to add a floor on the pricing. So take out some of that volatility we've seen the last 7
So it sounds like you think I'll take out downside volatility.
Downside volatility.
But what about the upside? Will it actually exacerbate it? Because it's like there's an ongoing buyer that just keeps putting passive money in, and then you've got specs like us who pile in every now and then as well, right?
Yeah. No, I think unless there's some sort of structural change, you're not going to see a big spike in upside vol. I think you've got to deal with regulations in the US. There's got to be some clarity before you see that first. So that's the thing. That's the event to watch out for.
See, where's this banana zone that we all want, man? Maybe it only happens in like the alts. Maybe the parabolic stuff only really comes in things like Solana and.
I mean, it does, right? I mean, it's just been, that's where all the meme. I mean, if you look at what's been happening to the meme coins and a basket of memes over the last few months, you know, really since the start of sort of the year, really. That's where, you know, people have been doing these bananas numbers. And, you know, listening to Raoul the other week on the show, it's like, you know, is Bitcoin going to do a 2x or a 4x from here? And he's dealing with, you know, big macroeconomic problems that we were talking about earlier, like debasement. And the only way that the kids today are going to make their 10x, 40x, 50x is by playing some of these silly meme things.
Yeah, they're not going to get it out of Bitcoin.
You're not going to get out of Bitcoin these days. And you know, so it comes down to, why do you want to own Bitcoin? You know, you want to own it for the fact of its being a decentralized currency, you know, a transmittable form of value, storage of wealth, you know, as a context to gold, right, for example. So, yeah.
But speaking of gold and silver are on fire right now. Especially silver's had a little catch-up move. I mean, it's still got tons of room to go, but like, I'm actually very interested in the precious metals move right now. I don't want to, you know, I don't want to go against the crypto crowd, but like I do think silver could have a little moment in the sun.
Yeah, but again, I think that's like just speaks for me like this sort of macro backdrop where, you know, you've got China now essentially doing QE, like Chinese style QE, artificially inflating assets, and again debasing the currency, because this is how they all kind of default, right, through stealth debasement of currency. So obviously Chinese investors like love gold, so they're piling into that. And it kind of keeps in mind that like Bitcoin is still, you know, we're still early. It's still a very new asset class that's not always easy for people to gain exposure to, particularly obviously in China. So I just think for me, you know, if you look at gold, it just speaks to the fact that like Bitcoin should follow, because the macro is actually playing out, and it's certainly been playing out really well in those hard assets. Because and if you look at, you know, even you know, if you think the Fed are making a mistake, I don't actually. I think we are in this like Goldilocks, slow growth, not collapsing growth. I don't think we can see reflation. I think we'll probably be a soft data point away from 10-year yields back below 4%. You know, we seem to keep flip-flopping on this, but we're in this like really slow growth, which real rates need to come down. disinflationary world. I don't see any signs that inflation's going to pick up anytime soon. Just look at where oil is and stuff like that.
Do you think the China stimulus triggered a reflation trade, which is probably a little bit too optimistic?
Yeah.
And it's like China need to reflate their own economy because it was a shit show.
Yeah.
But that isn't going to lead to this big global reflation trade.
No, partly because in the same way like Western economies, with QE 1, 2, 3, 4, it doesn't really feed into the real economy, and other than through like the wealth effect. But that I think that feed through is pretty weak. So what it does, it just artificially inflates the assets.
Yeah.
But China haven't really done anything to address the kind of structural issues they've got around consumption, and that's what they need. They need domestic consumption to pick up, and that's what the world needs. But that's not happening. So you'll have this dichotomy whereby like Chinese stocks and assets will be ripping.
Well, I was going to say,
and the economy will still be like struggling, and everyone will go, well, how? It's like, well, because that's what they're pumping up. And we'll do the same over here. And let's say, I think, the US economy, it still has this resilience, but it has resilience because they're running, north of 6% deficits. So, which is insane. This is like wartime level deficits. Now they're probably ramping that up into this election because the Biden administration wants the Democrats to win the election. But, when you're running that, it's going to be hard for the economy to collapse. But it's still slowing, and the what I call like the debt intensity of growth starts to fall. So you require more and more debt for each unit of growth. So I think growth's slowing, inflation's slowing. The Fed were right to cut 50. I think they'll probably cut 25 again, November, 25 December. I just think the market's got a little bit carried away with, it's reflation, China's stimulating, the US, the Fed have gone too big too soon. There are still signs that the labour market is slowing. Certainly it's normalised and signs that is slowing, but it's not collapsing. And that's why I say it's Goldilocks, because I never bought into the recession. It was only a few weeks ago we were talking about markets were pricing this recession trade because we had a bad non-farm payrolls. Now it's the other way. I'm like, I don't think we're in reflation mode. We're not in deep recession mode. We're just in a slowing disinflationary environment. The Fed are going to be cutting rates. The rest of the world looks like it's slowing even more. So ECB are cutting. China are going to have to continue doing what they're doing. And ultimately, it's just going to flood liquidity into the system. And Bitcoin and the broad crypto space is going to really benefit from that, as will tech stocks.
So it sounds like you're saying, financial assets are going to fly on this liquidity, but maybe real assets like copper and oil, for example, that are more based on real economic activity, maybe they're going to struggle a bit more.
That's.
But it's funny because precious metals sit somewhere in the middle there, right?
Yeah.
So you've got the industrial commodities, you've got the financial assets like stocks, and I guess crypto, we could call it that, right? And then you've got these real hard precious metal assets, and where do they sit in that? And they, ironically, they're the ones that are leading right now, right? Stocks are doing well as well, but those precious metals are really leading. So it's hard not to see a bull move into year end. I agree with you. I just think obviously it does feel very consensus, right? I don't think I've met anyone who's bearish really, like crypto right now, So we've seen a bit of hedging obviously, but that the only thing I'd say that makes me a little nervous is like I haven't spoke to anyone with a bearish case.
Right? Yeah, and I think one thing that's been brought out in the last few podcasts that you've done as well is that retail is nowhere to be seen lately in crypto.
Well, they're in memes though. That's where they are. They're not in the big cap crypto, but they're in the memes.
Yeah.
Right.
But like as well, there's a difference between being bullish and being positioned, and I think that's the thing. So I think everyone's kind of bullish. Like, are you positioned? Are you overweight Bitcoin? And again, like we've spoken about how the election's impacting risk taking. I think it is impacting risk taking. So I kind of feel there's a lot of people sidelined, just waiting for once that's out of the way, then we position for it. I agree that it's always a concern when that things feel consensus, but
that argument probably really backs the point that it is likely we get a knee-jerk higher after the election, but that's going to have a half-life, right? that rally move that comes after the election is going to peter out. It's just a question of how quickly.
Yeah.
Right.
Yeah.
So I kind of feel like my call about 8th of NOV calls versus NOV calls is all right. But would I necessarily want to stay long all the way into year end? I'm not sure, because I think it might get faded by then.
Yeah.
Right. So
Yeah.
that's the way I'm seeing the setup. Yeah.
Yeah. But yeah, and it'll be interesting. Obviously, we'll have a lot more information post the election. I mean, God, I know Trump says a lot of Trump things, but you know, if they did make Bitcoin a reserve asset, then I don't think any of us are bullish enough. Like, like it's like just silly. And then because it's not just if the US do that, then you know a lot of countries follow suit.
Yeah, I agree with that. But I think that's something for maybe next year. Right.
Yeah, maybe, yeah.
I mean, it kind of goes back to my point, though. What's it going to do? A 2x over the next 18 months? Maybe.
Yeah.
You know?
But it's funny, we sit here in crypto going, it might only 2x. Like, do you know what I mean? And it's a bit like I come in here most weeks pretty relaxed. Like, you know, I can kind of sit back a bit more on the longer term macro. Like, and people keep saying to me, oh, you know, why is Bitcoin, you know, why is gold kind of outperforming Bitcoin? Yeah. And again, I like on what time frame? Like, because year to date, Bitcoin's outperforming.
It's true.
Over the past year, Bitcoin's
just
outperforming.
Like in the last few months.
Maybe Bitcoin's just kind of consolidating, ready to then outperform again.
Well, yeah, that correlation between Bitcoin and gold the last 6 months has really, you know, diverged, and you know, Bitcoin's due to catch up by all historical metrics.
Yeah, I mean, it's funny, even at the start of this, and you kind of say, oh, like Bitcoin has kind of fizzled out, but it was only Friday we were pushing new highs at 69k.
Yeah. So
it's the weekend. It's kind
I think everyone's expectations of Bitcoin are just way up there because of the price history that it's had over the last 10 years or whatever, right? So I think that has kind of conditioned crypto investors to expect a certain amount of explosive return. And if it goes through a period of 3 months where you don't get it, you're like, God, what's it doing? Right? It's just, what's happened to this asset
and to
class?
Your point like that Rail made and stuff as well. That is the thing now. Like Bitcoin in many ways, like yeah, Bitcoin. You know, over the next year, I expect personally is gonna like at least like 2x from here. Maybe at 3x's. Like it now feels like, you know, people need like the meme coin stuff that's gonna 10, 20, 30x.
But that's what options are for, mate.
But what is it? What do we say? The
altcoin type returns out of options, right? I mean, the problem with options is obviously they decay, right? Yeah. And if you own some random meme coin, well, you could argue there's a form of decay in that as well, right? It might just go to zero, right? But you know, if you go long dated enough, if you go 6 months out, and you go into call spreads rather than outright calls, then you literally do have potential to 10x, 20x quite comfortably if you get a doubling in the Bitcoin price, right?
Like I always like looking at like call spreads like 6 months out and stuff, and you do.
They always look good.
Obviously, like max payouts and all that, but often like 10-to-1 plays.
Yeah.
On a reasonably sensible move. Like I mean, like
this is why we want more people to learn about crypto options, because you don't have to be in these random meme coins. Like, how many meme coins are created a week? Like hundreds, thousands. It's so random, right? Whereas these Ethereum, Bitcoin are not going anywhere. They've been around. And if you want 10x's, they are possible. Just got to understand a little bit more about how to use options. That's it.
Where do you think we go with Solana options? Yeah,
I mean, I've been, you know, I would like to see longer dated. The only thing preventing me trading Solana options is I don't think they're long dated enough, where the liquidity lies, right? So if there was more liquidity in 6 month stuff, then I think there'd be loads of interest to buy that stuff, right? Yeah. Right now, it feels like it's more of an OTC market than a listed market right now. What do you think?
Well, I think the whole sort of, you know, Bitcoin, ETH, Solana thing it's just becoming an institutionalized asset class now. You know, we pointed out, you know, a lot of retailers punting meme coins around. So how does retail get back involved? Maybe it's through options, you know. But Solana's base is, you know, there's a lot of meme projects in Solana and not much other stuff going on. Ethereum, you've got use cases for in the art world. Bitcoin is a store of value. So yeah, I think you've got I think you've got an opportunity with Solana to bring in, you know, both retail and institutional coming into that space for sure. It's going to be an interesting one.
Yeah, and I am excited about the IBIT options being listed because, you know, the US listed options market is crazy, right? I mean, the volumes that trade in the likes of Nvidia options, Apple options, Tesla options, whatever, right? So if maybe, you know, we're saying where is retail? Where's the retail euphoria? It's all moved over to listed options in tech names, right? But if IBIT comes along and is available to them, and then you get like a 20% pop in Bitcoin because of the election going out the way and stuff like that, maybe that is what you need to attract the retail market back in, and they use that instrument, call options on IBIT, and that sucks in that some of that euphoria, and you actually see the blow off move that we've been talking about.
And,
right?
and I think that's something as well for firms like ours, which is looking at the structured products and structured products being on offer. You know, if you've got options, whether it's in the ETFs or whether it's just on the spot, that's something that's going to give people downside protection. That's going to help them be confident about investing into there.
Yeah, well, that's what I'm all about. That's what I teach people at Options Insight, right? On the crypto side, it's like how to be long, but how to protect yourself as well, so you can be long and sleep easily at night, basically, right? So.
Joe Summit as well. Like, I mean, we've kind of stopped talking about it now. You've just mentioned Solana. I still think ETH is just ready to like rip at some point. Yeah. I've been wrong on this. Like, so hands up. Like, I've been expecting that really ever since the ETFs come along, and I do think, you know, as we get proper bull market momentum, everyone moves out the risk curve. But you know, Michael, when he was on with Raoul, you know, made the good point around as soon as we get into a lower rate environment and Fed cutting rates and everyone else, then DeFi yields starts to look more attractive. Activity, DeFi activity picks up, and a chunk of that, obviously, majority of that is still going on in Ethereum. Yeah. The actual ETFs have, again, like, it all depends like what metrics you look at, but they've actually been still pretty successful. Like, you know, if you look at broader ETFs outside of crypto, so I still feel that there's and perhaps it's something we can look at in other episodes in terms of ways to play that, like, through the options space. But I still think there's material upside there. You know, we're still quite a way off the highs on Ethereum, like relative where Bitcoin is. Yeah. And it's actually, like, last week the moves looked interesting in terms of Ethereum looking like it's breaking out. So I think that's one to keep an eye on, and the fact that we don't really even talk about it anymore is probably even more of a reason to keep an eye on it.
Interesting.
Because I think there could be a decent move brewing for that.
Yeah, I just quickly on that point, I spoke about that recently in front of an audience, and one of the answers that came back was that we saw so much froth with the NFT bubble in Ethereum that as that kind of retracted, that kind of, you know, discounted the fact that, you know, post Cancun and Shanghai upgrades, that it's now a deflationary asset class, and, you know, there's all these use cases for Ethereum that we don't have with some other projects, that it's now well undervalued relatively to where we are. I mean, you had Standard Chartered's, you know, Kendrick calling, you know, 3,000 ETH by the end of the year.
Yeah, very possible. I mean, the vol spread was compressing, got sub 5 vols last week or week before. Right. I did cover my shorts on that. I haven't gone long yet, but just because I think Bitcoin's the one that's going to have the knee jerk on the election. But yeah, for sure, like, the market's pricing in a little bit of a call premium above Bitcoin if we go out to next year. So I think the thing about ETH, like the bullishness on ETH has always punted into the future because it just doesn't happen. It hasn't happened, right? So whilst they're willing to pay a little bit more for calls on ETH from March 25 onwards, only about a vol point more, but it is still more. So the options market is kind of nodding its head and agreeing with you, but it's just not banging the drum yet. Yeah.
So you wouldn't quite sell Bitcoin vol to buy ETH vol just yet?
I wouldn't. No. I don't like the idea of selling Bitcoin vol into the election. Yeah. Well, vol's different. Just being short delta on Bitcoin into the election, I wouldn't want to do. Right. Yeah. Vol's going to get slammed to some extent because of the event premium. Right. But yeah, I don't like doing the relative value trade right here. I think it's going to be a noisy one between Ethereum and Bitcoin. So you kind of want this madness of the election to pass, and then maybe there's a trade there, right? After Bitcoin's had a knee jerk, maybe it's left ETH behind. Maybe ETH Bitcoin cross has dropped again below the lows. Then maybe there's a nice entry point for you. But I think you probably want to wait till the event for that. Yeah. All right. Cool. I think you'll call it a day with that one. It was a great discussion. Appreciate you coming on, man.
Pleasure.
Yeah, it was really good.
Yeah. And we will remember, like, subscribe, make sure this information gets passed around to as many people as possible. because, you know, the opportunities in crypto are here now. We don't know how long they're going to last. So the more people who can understand options, get their head around it, realize that the altcoin type returns are available without picking the next meme coin that takes off. We'll see you all next week.